Welcome to the Keiser Report. I'm Max Keiser. You know, we're still buzzing from our Hong Kong trip. We met some fantastic people, and one of those folks is Paul Schulte of Schulte Research. It's really an excellent resource. I had not been exposed to this before, but Paul has graciously allowed himself to come on the show here in London, and we wanted to follow up with some more questions. Paul, welcome back. Welcome to the Keiser Report. Great to see you. So, Stacy, why don't you kick it up?
Well, I wanted to ask you because about the banking system. You provide a lot of research for banks across the world and investors looking at what the state of the banking system. First of all, let's look at the U.S. versus the European banks, and in particular in light of the fact that Mario Draghi signaled that they're going to do QE, i.e. taking off the sovereign bonds off the market, so that tier one collateral, I guess you would call it. Where should we be worried right now in the banking system? Which banks are the most vulnerable around the world?
Okay, so from the point of view of the corporate sector, the corporate sector is the sickest. Number one, the sickest corporate sector in the world is Spain. Number two, the second sickest corporate sector in the world is France. Number three, the third sickest corporate sector in the world is Italy. And then the fourth is Germany. The U.S. is in great shape. The U.S. corporate sector in the U.S. is in good shape.
All corporations or just banks?
This is the non-financial corporate sector and of their bad debt, which of course feeds into the banks. So the point I want to make is that the U.S. is in good shape. China's corporate sector is in good shape. There's so many naysayers out that the corporate sector is in better shape than many people think, and the equity market is finally recognizing this.
Of course, we started 2015 with the big blow-up of one of their property developers, I think, went bust.
There's 6 or 7 property companies that are problematic. There's 4 power companies. There's 1 rail company. The rest of it's in okay shape.
So Spain, number 1, bad. France, number 2, Italy. Okay, so what about the banking?
So this is the problem. So the core, if you look around the world and say, where's the trouble is squarely in Europe. Number 2, on the banks themselves, Deutsche Bank and Credit Suisse have 2 of the largest amounts of level 3 assets in the world. And so you still have
to the audience
level 3 assets are leftover derivatives that were just bad bets from 2000.
Leftover derivatives, that sounds pretty bad.
Well, it is pretty bad, right? And so they're a very large part of that. So you still have a legacy of derivatives in those banks. These banks are extremely large. The leverage levels are still very high. They are not very liquid, and so you have a very significant problem both from the point of view of the corporate sector and the banking sector in Germany, in Italy, in France, and in Spain. So that's basically my take on adding together the corporate sector and the banking sector.
Well, there's this perception that the banks have gotten away with it. But I think if I'm reading your research correctly, there's a legacy issue in terms of, for example, HSBC. They're on tenterhooks. If they are caught again in violating various laws, that some onerous restrictions kick in, et cetera. Can you speak about that a little bit?
Yeah, well, it's very common knowledge that the deal they made with the U.S. government was what is known as a contingent prosecution. So it is not a closed case. There's sort of a 5-year probationary period.
The case originally was when their lending arm in the U.S. the money laundering case as relates to the Mexican cartel case. So that's what we're talking about.
That was the $1.8 billion fine for that, and that's a contingent prosecution. So it's not a closed case. It's a 5-year probation period. So when you're on probation, you better keep your nose clean.
What could happen if, in fact, they are caught doing some nasty bits?
Well, the people I talked to at HSBC are obviously paranoid about making sure that they comply with every single crossing every T and dotting every I. We don't know what the consequences could be, but the worst case scenario is, the withdrawal of the license to be able to operate in the U.S.
Is this one reason why banks are hesitant of making loans, doing business?
I think that's part of it. Well, come on, right? So how many of these banks are actually hiring, like HSBC is hiring another 1,500 people this year. Why are these people hiring more and more compliance people if the problems are past behind us, right? So there's something else going on.
So you said HSBC already has 23,000 compliance officers now?
They have 25,000 IT staff, 15,000 compliance officers and legal officers. So they're going to hire
another 10%. They're going to increase their...
More than 10% in terms of, yeah. So that's right.
So, but let's go back to these European banks. You're talking about the highest levels of level 3 assets. If you talk about the percentage and what causes these things to tumble, what could happen in 2015 that might see it kaboom in Europe?
Well, what's happening is the regulatory authorities are rightfully saying, if you want to keep those derivatives on your book, you have to have something else on the other side as collateral. And so you have to keep space on your balance sheet for collateral. That if somebody says, "Hey, I don't trust you on this one. I'm going to give me your collateral. I'm going to sell it." If all this collateral gets gummed up, you're just squirting glue into this machine, and the machine goes slower and slower. So this is the problem. When you have all those derivatives on your balance sheet stuck there, this gums up and the system begins to freeze and.
But if they need more collateral, is quantitative easing from the ECB going to hurt them or help?
Well, it can't hurt. But many people who I've talked to in the last couple of months are, including some of the largest fixed income managers global, or some of my clients, they're very dubious about whether quantitative easing is going to do anything. What needs to happen in Europe is the ECB is going to have to purchase corporate debt.
Right. Well,
are they in the mood for that? I don't think so. Germany does not want this to happen. Everybody else does.
They could maybe sell it to Japan. Japan might buy some of the corporate debt in
Right.
Europe.
You have to go in and buy something more than government debt to get sort of corporate Europe restarted.
when Janet Yellen stopped quantitative easing in the U.S. and then Japan announced QE 9 or 12 or whatever it was.
53, yeah, right. Yeah.
Is on a net basis, has QE stopped around the world, or is it expanding?
No. QE is expanding, very definitely expanding. The UK is expanding still a little bit. The numbers in Japan are close to $1 trillion, right? So Japan's going to get up to 50% of GDP. The Bank of Japan balance sheet is going to be 1/2 of the GDP of Japan. Right now, it's about 30% for the US, 30% for the UK. I think some of my clients who are some of the largest fund managers in the world, they are thinking that the ECB balance sheet needs to expand by $1 trillion.
Okay, so Japan's debt to GDP is, on a national level, is over 300%.
Yeah, 220, something like that, yeah.
Okay, so the interest on the debt is approaching a palpable percentage of GDP as well. So when GDP is approaching...
Only as long as rates stay at zero.
Right,
Yeah.
but if the interest is now going to be close to GDP, isn't that the definition of a currency failure?
If your interest rates are kept at like 35, 45 basis points, you can do this for a long time.
But even so, the debt keeps on going up.
If rates go up, Japan is goose is cooked.
I want to go back to something you said a minute ago in reference to derivatives and collateral. So on the derivative side, there's this debate about whether it's mark-to-market or mark-to-theory. So you have a book, you have a bank that's full of derivatives, and
That's right.
the bank says we're going to market based on our theory that the value is worth X, Y, and Z. Then the government will say, well, you know what, we think you should mark-to-market, what's the resale value of these things, what's it really worth, et cetera. So that's one side of the derivatives pie. And as you point out, on the other side are something called the collateral.
Yes.
But on the collateral side, there's constant discussion about what constitutes collateral. What's a for example, there's less and less AAA rated government paper in the world.
Yes,
I think
sir.
Finland just recently got downgraded.
Yes, sir.
So the collateral is shrinking. The value of the collateral is also shrinking.
That's right.
So here you are.
Exactly.
Let's say you're a bank. Let's say you're JP Morgan, for example. You've got a 90 trillion in derivatives. So you're fighting two wars here. You're saying, A, we're going to constantly be obfuscating in terms of what we're going to value our derivatives on this side of the ledger. And on the other side of the ledger, we're going to constantly battle you on what constitutes collateral.
Yes, sir.
Is that a fair statement?
Absolutely.
And are they committing misrepresentations on both sides of that equation?
I think it's fair to say that there is misrepresentation. In fact, I would give you an example. The CFO of a very large bank at a conference with 20 people in the room, when somebody asked the CFO of a very large European bank, didn't the ECB in this latest stress test question you on the value of your derivatives? And the guy said, we were very surprised they didn't.
Right. Because it's off their balance sheet. They don't include it on their balance sheet. It's somewhere off the balance sheet. It's somewhere on the Fed, the balance sheet of the Fed, on the central bank.
They didn't want to hear the wrong answer. That stuff was on their balance sheet. It's not mark to market, and in fact, not only that, but the default presumptions are that only between 0 and 10% of all those derivative products has a probability of default. This itself is an absurd thing. This was what the foundation of the stress tests were.
Okay, the global banking system is in various levels of stress. Every single country has money center banks that are experiencing a lot of stress. If you look at the global picture, where is the soft underbelly? I mean, if you look at Japan, it looks like that could be where things kind of finally fall apart, but maybe that's wrong. Maybe there's another area, another center that's even more fragile than that. Where's the most fragile place in the banking system in the world that could set off another Lehman-like moment?
I don't think Japan is, because Japan's banks have high levels of leverage, but Japan's banks are extremely liquid. Japan's banks have got like 30% of their balance sheet is cash. So I'm not sure it's a Japan event. I think it's going to be a European event. I think it will probably be, it could be Italy, right, after Greece, right? So the Italian corporate sector is in terrible shape. The Italian banks are very highly leveraged and have no liquidity. Deutsche Bank has its own set of problems. And I think BNP is its own. BNP is $2.7 trillion of assets, and BNP has grown its assets in this entire period of the whole crisis.
So that's about the size of the French economy.
Much larger.
Yeah. It's about $2 trillion.
Yeah, right.
Economy,
So,
right?
That's right.
Yeah.
So we're talking about two banks that are, and SocGen is only slightly smaller, right? So. I think it's a European problem. I think it's a European issue. I think this is bad for the euro. I think
So what's the euro going forward? Are we back to discussing whether it can stay together? Or can you break it apart? What are your thoughts on that?
Well, of course, today the German government denied that it was ever had any discussion in the last 72 hours about whether Greece would exit the euro again. Greece's debt to GDP is approaching 200%, and it's unfundable. And the corporate sector is in bad shape. And so now there's questions all over again about whether Greece leaves the euro. To me, Greece is a sideshow. Spain and Italy are the key, right? Spain and Italy are both in bad shape. Corporate-wise, they're in problematic shape in terms of the banking systems. And
yes,
so,
plus Greece is only 1% of European GDP.
Tiny,
whereas
that's right.
Italy and France are
that's right.
a huge percentage of it.
So I think the underbelly of the world, to answer your good question, is either Italy or Spain right now.
And you see a lot of migrants in Hong Kong from these countries, right?
That's right. We were talking before the camera went on. Yeah, that the largest expat population in Hong Kong is the French, and there are just huge numbers of Italians pouring into Hong Kong.
And these are the people you would want in your economy, the young,
Indeed.
upwardly
Yes, sir.
mobile.
Yes, sir. Exactly. That's absolutely right. They are bringing tremendous amounts of life and culture and cafes and restaurants and delis and the best food in the world and
Camembert
and new fashion. And the fashion industry is all the better for it. So yeah, Hong Kong is a very big beneficiary of this. Absolutely, sir.
I'm loving Hong Kong. All right.
Yeah.
We got to take a break.
Yep.
Stay right there. And we'll be back for a lot more very shortly. So don't go away.
It was a terrible mistake, and we're working very hard to make up for it.
And once again, we put something on the air. It's a flat-out lie.
Have you ever had sex with Governor Rick Perry?
No, wait. Do not answer that. I want you to watch what we're about to do because you've never seen anything like this on television.
Most people think to stand out in this business, you need to be the first one on top of the story or the person with the loudest voice or the biggest ratings. In truth, to stand out in the news business, you just need to ask the right questions and demand the right answers. Question more.
Welcome back to the Keiser Report. I'm Max Keiser. Okay, we're back to our new best friend, Paul Schulte. He's usually hanging around Hong Kong, London. Look up Schulte Research. It's fantastic. And anyway, Paul, I wanted to kick off the second half here by talking to you. I know you've talked to me about this before, but I totally I forgot. The McFarlane effect in 2015, what is it?
Okay, he is coming in as chairman of Barclays, and he was previously the guy who came in and tore Aviva apart and restored Aviva to life. He basically fired several thousand people. He fired a lot of the top people. He cleaned it out. He cleaned out all the mess and the waste, and he turned around the company. And he's been coming in as chairman of Barclays, and I believe he's going to impose a mandate, which is basically that Barclays' total assets now are $2 trillion, and he's going to try to bring that down to 1.2, 1.3. So he's looking at taking $700 billion off the balance sheet of Barclays.
That sounds like he's going to break up Barclays.
I hear you, sir. Now, this is something there's a lot of discussion about that in Hong Kong. There's a lot of discussion about what happens to Barclays Capital. Barclays Capital is 1/3 of the bank, right? Do you break it up? Do you sell it? Do you close part of it? Do you sell the whole thing to a Chinese entity or another entity around the world who might be interested in buying this? This is a big question. But I think that what's happening all over the place is I think that there is a come to Jesus party here where everybody is going to have to think about whether they need to either completely hive off their investment bank or close it.
By the way,
is what we have to watch out with McFarlane.
McFarlane effect, you see it going around to the other banks.
Yes.
But Bob Diamond, the former CEO of Barclays, he's just ditched Barclays Capital for his own fund. He has his own fund,
Yes.
and Barclays Capital was his bank, and he's just dumped them. So maybe he knows something about this hiving off.
Yes, ma'am. Yes, ma'am. I think he has an awful lot of knowledge about that. Well, I can tell you right now in Hong Kong, Barclays Capital in Hong Kong in the Far East is a former shadow of itself, right? RBS is completely gone for all intents and purposes. RBS has been shut down in the Far East. RBS is
that's good for the taxpayer who owns RBS.
The government's done a pretty good job of cutting RBS in half in the last 6 years, right? So RBS is down to a manageable level. Look at the stock price of RBS. It's responding to cutting down all the fat. So the more you cut down, the more you hive off, the more you rationalize and clean up and get rid of all the toxic waste, the quicker your stock price is going to react. Deutsche Bank is keeping on its old blood.
But this is cyclical, you know. On Wall Street, the history is a conglomeration, then de-conglomeration, then re-conglomeration. They bring in some, corporate hitman like McFarlane, who comes in, he fires a lot of people, and they say, we're going to break up the company, and it's all going to be separate units, and the stock price is going to go up. And then 5 years later, the supermarket model comes back, and you have people like Citibank over there buying Travelers Insurance. Remember that whole episode? They break all the laws, all the anti-competitive laws. So is this just a cyclical trough we're going through? I mean, it's just the same old nonsense, it sounds like. Or there's no reform. No one's going to jail. These, like RBS, they committed freaking crimes.
Yeah,
through the global restructuring group. Okay, they attacked their own customers. They sold them off for scrap to make a profit. They're corporate hyenas.
I hear you.
So what do you tell your customers? You advise hedge funds. You say, well, hold your nose and buy the stock. I mean, how's that going to? There's got to be some kind of social contract, social responsibility at some point, Paul. No?
Well, the social responsibility, the social contract gets enacted. There is a relationship between the government and the people in the legal system. And if you have a problem with your bank, do a class action suit. And this is exactly what's happening right now. We can segue into that if you want, but the class action suits that are happening are pouring out the door right now because of all the banks that have committed hanky-pank with the high-frequency trading.
Excellent.
That's what we want to get to.
Yeah, we want to get to the high-frequency trading, don't we, darling?
The 9 felonies of high-frequency trading.
9 felonies. It's not the 12 gifts of Christmas.
Yeah.
These are the 12. This is the 9 felonies.
9 felonies
of
dancing,
high-frequency trading. All right, this is good. I like this already.
So what happens in 2015? Tell us about these lawsuits. What do you think the results will be? Can they prove these crimes?
So the number of economic crimes that banks have either copped to or basically said that we're going to pay some money for, or where there's been actual convictions, there's been about 15 economic crimes. The next group of these is 9 economic crimes, which is basically a range of things from front running, basically rigging, antitrust violations, a whole assortment of basically breach of fiduciary duty, fraud, conspiracy, and so forth. And so you go online. You can look at all these class action suits that are piling up, and you have dozens, literally dozens of people who are lining up in class action suits to get justice, to get a compensation for harm.
Is there any merit at all to a high-frequency trading program? Does it add liquidity or make markets or add the system in any way, shape, or form, in any way? Because since that industry began, I've said since day one, this is nothing more than high-frequency theft. There's nothing being done here. They're not adding a single benefit to these markets whatsoever. Is there any benefit whatsoever to that practice of high-frequency trading?
One of the CEOs, I believe it was a CEO of BlackRock, or I think it was BlackRock, but I could be wrong. But one of the CEOs the other day said if the dark pools and the high-frequency trading in dark pools went away, the world wouldn't miss it.
Yeah, but my point is that
He's agreeing with
there
you.
are publicly listed companies in the business of high-frequency trading. Where's the SEC? If all they're doing is, if I take my business of hijacking cars and selling them in Mexico, public on the New York Stock Exchange, I would get in trouble. If I have a high-frequency trading racket, and that's what it is, a racket, where I'm sticking my big fat algorithm into the exchange and sucking cash out of it like a vacuum cleaner to go buy drugs and prostitutes, I mean, that's a crime. So why is it not being shut down?
A lot of it has been shut down. Getco's IPO was canceled at the last minute, of course. So the market did respond to that. Michael Lewis would say in his book that not only are many of the high-frequency trading firms fraudulent, he would say that the liquidity they provide is artificial liquidity, and that something like 80% of the liquidity is completely false. And so the argument that high-frequency trading firms provide liquidity to the market is
well, in
false.
2008, where was the liquidity? Nowhere. It collapsed. There was no liquidity because they couldn't come in.
That's right. That's
So
right.
they didn't do anything, even in a stressful situation.
Okay, I want to move on from these old school, old banks, these dinosaurs. In fact, you have a headline about the dinosaurs and the evolvers on one of your recent papers. So I want to talk about the evolvers. Get rid of these dinosaurs. Let's talk about fintech, the whole financial technology industry, whether it's peer-to-peer, whether it's crowdfunding, peer-to-peer lending, or Bitcoin and the blockchain. Where do you see that? Are banks prepared for the blockchain? Are they ready for this?
No, they're not. And so what I would say to you is, here we're in London, right? Mr. Haldane from the Bank of England Andy Haldane said, we are looking at a change in the financial system of our world, which is could be one of the greatest revolutions in centuries. This is not a cyclical issue. I think there's a profound, deep, the depth and the breadth and the profundity of what is happening in front of us with financial technology is something that we see once in a lifetime.
On a competitive basis, isn't the first country to adopt this and let the regulatory framework be accommodative going to get a huge first mover advantage over everyone else in the world? And can't that country be like
China.
Hong Kong?
No, it's China, with Alibaba. The Chinese government has been more accommodative to financial technology than any other country in the world. And that is why Alibaba is so far ahead of even any U.S. company.
I think people will be shocked to hear that. And, the World Bank did just do a report where they said right now, this past year in China, there was $10 million raised on crowdfunding platforms. Yep. They see it being $50 billion per year by 2025.
Yep. Now, China is banking on companies like Alibaba and Tencent and others like that to revolutionize the market for financial products through the phone system, which includes securitized products, federal debt, provincial debt, and securitized REITs. And the creation of a long-term capital market is going to be aided by Alibaba.
When you say that, I immediately think of what's going on in Africa, places like Kenya,
Yes,
where
sir.
they've gone completely mobile with their banking system,
Yep.
and they've kind of leapfrogged all the traditional banking system. And I know China is big in Africa. They're making huge investments
Yes.
in Africa. Is there also a connection on that, the financial technology level between these two countries?
Absolutely, yes, sir, yes, sir, yes, sir. So companies like M-Pesa in Kenya are trying to go to other countries in Africa, but the stuff that's being done inside China with what is being done with Tenpay, right? I can guarantee you, I was at a conference on.
What is that?
Yeah.
So Tenpay is the payment system for Tencent.
Okay.
Tencent is the second largest company after Alibaba. And I was at a big data innovative conference a few weeks ago in China, and the stuff that Tencent is doing in terms of understanding its customer base, creating ratings on individuals, which allows you to have credible ratings on 400 million people that didn't even exist 3 or 4 years ago. Right?
Like a Moody's rating.
Absolutely. Yes,
On
sir.
individuals.
Yes, sir.
So it gives you credit. It facilitates the lubricants of
Yes,
lending,
sir.
essentially.
Yes, sir.
essentially.
Yes,
You
sir.
get rid of all the middlemen. But
Yes, sir.
you know, when you talk about this, it reminds me 10 years, 15 years ago, of course, you had the micro loans in Bangladesh and India were huge. It was the beginning of a revolution. It sounds
sir.
like the epicenter of growth now is China. So that's and I think there's a crowdfunding conference coming up in March in Shanghai. So I guess this is really where the center of the action has become.
Absolutely. Yes, sir. Yes, sir.
And so how does Alibaba figure into this? Is it like how eBay brought PayPal really to the world and expanded it? What role does Alibaba play in expanding the financial technology?
So think about it. So Alibaba's capabilities now. Alibaba is eBay. It is Amazon. It is PayPal. It is Square. It is Microsoft. It is Google.
All in one company.
It's all in one company.
Yeah.
And not only that, it's also. I would like to think of what's happening to Alibaba. Also, it's Disney. Alibaba is a
What?
Alibaba.
How do you
is
get there?
Alibaba is going to become, I think, a major player in streaming video that's going to bypass cable in the next 3 to 4 years. Think about it. The CEO of Alibaba came from the Film Council. This is interesting information, right? And so I think the way in which streaming films hitting phones and PCs.
like Netflix made this Kevin Spacey series,
right.
House of Cards.
So you can bypass the cable system. So the cable companies are in real trouble in China, and I think Alibaba is going to revolutionize that whole streaming. And within 2 years, you're going to be able to use your telephone to as a home entertainment system to flash your phone on the wall, 5 foot by 5 foot wall, white wall. That's going to give you a 3D movie off your phone.
Right. So film production in China, I guess also they've got a lot of indigenous production, a lot of local stuff.
Exploding, absolutely exploding. One of their big movies came out last week, Gone with the Bullets. That was the first.
Gone with the Bullets.
Gone with the
It's
Bullets.
like Gone with the Wind.
Gone with the Bullets.
With
and it was
karate.
it was a major, big budget movie that had the largest viewership ever in Chinese history on the opening night last week.
Right. Okay. So this is very exciting. As you know, we had a lot of fun in Hong Kong. I think we're going to go to Shanghai in March for this crowdfunding conference. I don't know if you're going to be there or not.
I'm going.
You're going.
All right. It's a party in Shanghai.
Yeah, we're going to Shanghai in March.
Dim sum.
We got our crowdfunding platform Start Join, so you could probably find out more details about it on that as well.
Well, thank you for coming in.
Yeah,
again.
we're out of time. We got to go. And but thanks so much for being on the Keiser Report, Paul Schulte.
Thank you very much.
And by the way, did Max pronounce your name correctly?
Indeed.
Okay, good.
See, someone calls me sir. I like that. From now on, I want all the guests to call me sir.
Yeah.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Paul Schulte of Schulte Research. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.